Hey everybody, it's Shannon from alphatrends.net. Today is Friday, the 26th of September. Hope you had a good week. It was pretty volatile for the markets, but we ended with just minimal losses for the S&P, NASDAQ, and the Russell 2000. Semis continue to be the best performer with their 2% gain. They're now up 33% year to date. Ethereum lost 10% this week, but if you've been following me, you should be in with a profitable position. So let's take a look at these charts and make some sense of it. What we'll do is we'll start out on TradingView. And this is the look of the 5-day moving average. When we're below a declining 5-day moving average, we have red, basically saying that we want to wait for the market to prove itself before we get aggressively buying in these particular markets. And you can see the semiconductors just underneath the SPY. It continues to be positive. It went cautious, a little bit yellow this week, but continues to be the best performer. And as I pointed out, on Thursday, right at this level, I mean, it was the exact low. I said, this is a good place to cover shorts, and hopefully maybe you bought in there as well as it was bouncing away from that level. While I have TradingView up, let's take a look at crypto. My thought was, and we've got another test of the anchor from the April low right in here. So it's not bouncing yet, and I've kind of thought it was going to be a little bit of a laggard. But this is a key level in here. What I'd really like to see with Bitcoin is a slight undercut of this low, and then perhaps it can start to rally and maybe up to the anchor from the all-time high. My focus has been on Ethereum and Solana. And yesterday, when Ethereum was right here, I had posted that I had just purchased some. That was last night because it was right on, it was bouncing from the anchor off of the handoff from the April low. So that was where, if you remember, I was talking about how I wanted to see it break this level and break that prior band of resistance in here. A lot of people were looking at that as support. I said it would be better if it breaks below it, catches a bit at this level, and then now I'm hoping that it can rally maybe something like this up to the anchor from the all-time high. So 4350, 4400 is what I'm thinking it has the possibility to do. If it breaks below this low, I will most likely exit my position, as I see this as a bounce trade, and if it was to break that, it would create a lower low and that would invalidate the bounce. I also purchased some Solana in here, 195-ish last night. I didn't buy as big a position as Ethereum because I was hoping it could still come down into this zone, which is the anchor off of this low right here and the orange from the election. Anyways, let's talk about what we focus on here, and that is equities. So the S&P 500 on the daily time frame, we pulled back pretty much to where I wanted it to. That is the 20-day moving average in this prior level right here. That was also the month-to-date anchor and basically the anchor off of the most recent relevant higher low on the daily time frame right here. So if I add that in, you can see that's equivalent to what we see. Oops, wrong tool. If I add that in, that's equivalent to what you see here on the 30-minute time frame. So let's just back up a moment. There's our rising 20-day moving average. Now the 20-day moving average hasn't been perfect, but it's been good. And as long as that 20-day moving average is rising and that 20-day moving average is above a 50-day moving average, I look at this market and say, this is most likely a pullback that will continue to move higher. For next week, I'd like to see this. Let's erase the week-to-date volume-weighted average price. The black is the anchor from the Fed. The red is from the all-time high. So we did close above that, but we have a declining 5-day moving average. And on Monday, as we average this data out, that means even if we rally up to here, that 5-day moving average will continue to decline. So if it did rally, I would expect it to do something like this, then catch a bid around that 5-day moving average as it starts to flatten out, and then be able to continue to move higher. Otherwise, you have to be on the alert that it's possible that we break the volume-weighted average price from yesterday's low as we get stuck below the 5-day moving average. And if it's to do something like this, then we come down for another test of that 20-day moving average and the anchor off the September low. If that happens, well, then maybe that's going to lead the way to a little bit deeper selling. There's no evidence for either of these yet. So the bottom line is it's kind of in no man's land here a little bit until we get some further price discovery and the market tells us what it wants to do. If it wants to do this, catch a bid, well, then I'll be looking to get long for swing trades in the SPY here. If it does this, I would likely get short for day trades in the SPY, because the primary trend on the daily time frame is still higher. So any shorts I would take would be against that primary trend, and I wouldn't want to hold the overnight risk in it. The NASDAQ, still below its 5-day moving average. That 5-day moving average is declining. That's the orange line, of course. I was hoping we could come down to the conjunction of the 20-day moving average and this prior high. We've still got a strong market on the daily time frame. So what is your time frame? What is your main concern? This might have just ended up being a short-term pullback that is going to continue to move higher. That's definitely possible. So on the 30-minute time frame, if we do this, though, then my bias will be some more profit taking. It won't be bearish. I won't be looking at this and saying, hey, the market's done and we've made a top. That's foolish thinking. Instead, if it does something like this, rallies up through that 5-day moving average, catches a bid along it after a little pullback, well, then I would be thinking we're most likely to continue to all-time highs. And always remember that the higher time frame is where you put the benefit of the doubt. So the benefit of the doubt on the longer-term daily time frame continues to go to the buyers. The Russell 2000, as we noted, had one of the weaker performances this week. And here is, again, the anchor from the election. I don't know why that just disappeared. Let's put that back on there. We'll color that black. But that's the anchor from the Federal Reserve. So what does that mean? Everyone talks about how lower interest rates are good for the small and mid-cap stocks. But what we have seen is that anyone who's bought the Russell 2000 on an absolute basis and a volume-weighted average price basis is losing money. Now, not a lot of money, but we're below that level from where the Fed cut rates. So if we rally up into here and find supply and get rejected, that's going to send a strong message about the Russell 2000. Keep in mind, you'll want to have an anchor off of this low, and if it just gets a pullback down towards that, then recovers, that would be awesome. That would be a great scenario to say the Russell 2000 can continue and go on and make new all-time highs, as it had done this week with an intraday all-time high. But again, keep in mind, what we often see is breakouts to new all-time highs from an extended level are often met with some profit taking, especially when we have news like the Federal Reserve cutting interest rates. That's what everyone was expecting. So a little bit of buy the rumor, sell the news. Semiconductors, as noted, are the stronger group in here. They are not breaking down. They're holding above the anchor from the Fed. They're holding above the anchor from the all-time high. And this is your strongest group. We had a quick shakeout. Then what did we see? We saw higher lows. We saw a higher high, and the buyers are in control. Right now, I would say from an intermediate term perspective, if you're long and looking to protect your gains, your worst case stop would go under here. That's this low. I would put my stop here just to be a little bit ahead of the curve in terms of risk management. Biotech stocks had a good day. They continue to ride the upper range of this Adams pitchfork. It's not a tool I use a lot, but it's a lot of times a good way to look at the trend and just say, here's the midpoint of it. Here's been the upper range. Here's been basically the lower range. Let's look at the weekly chart on these biotechs, and they still have a ways to go. Clearly a long ways to go for new all-time highs. That's up at 175. That's a 70% move from here. So 70% for those, for this group to make a new all-time high. The more important level in the intermediate term is this level right here. This is about 105. Running up to there probably would, get this market similar to the Russell 2000 to break out. And then what would happen at that breakout? Most likely some consolidation, maybe a little shakeout, create a higher low, and then do some recovery to be able to continue. Meanwhile, we had a nice shakeout on the shorter term time frame. To me, the biotech index itself is a little too choppy up here. So if you're looking for biotech exposure, I think you're better off with looking at some of the individual names. The bonds continue to digest after the sell-off since the Fed cut rates. So again, this is when Federal Reserve cuts rates. When interest rates go lower, bonds go up. But what's happening? Bonds are going lower, meaning the 10-year yield from that rate cut right here. The 10-year yield has gone from 404 to 4190. So it's had a big adjustment higher in interest rates. The market knew it was coming, so it bought the bonds, and now they've been selling them off. Buy the rumor, sell the news. Now, if you're looking to get involved, this is what I'd pointed out to subscribers, that if we get up to this level, it will be extended. We want to see it pull back. Now we've got a 5-day moving average flattening out. We've got the rising 20-day moving average above the rising 50-day moving average. The 200 is still declining. This is where we were 200 days ago. So what does that mean? That means Monday, Tuesday, Wednesday, Thursday, Friday, we'll be getting rid of averaging this data out, meaning that 5-day moving average in a week, week and a half is going to be rising if the market just turns sideways in here. So to me, that gives the benefit of the doubt to the buyers. It's in a position to change back higher. So now we have this, this big push higher intraday that failed. In the next day or two, as we consolidate above the 5-day moving average, this is a good place to start looking for bonds. If you're looking to buy bonds, it's in this area. Your worst case stop would go under here. By the way, you could look at this shorter term time frame and say, is that a shoulder? Is that a head? And maybe it's going to create a shoulder. That's the way you want to look at the bonds. They are setting up. They're holding right on the rising 20-day moving average. This is the first time in quite a while we've had a rising 20-day moving average above a rising 50-day moving average and the 200-day moving average flattening out. The last time we saw anything like that was over here in this area at 93, and it promptly ran to 102. Doesn't mean it's going to do that again, but it's in the best position it's been in a while for the potential of that happening. That's all I'm going to talk about here today. I hope you had a good week, and don't forget, I do this every single day for subscribers on alphatrends.net and on X for just $10 a month.